Welcome to Smart Stock Watch. Today is 2026-02-19. We're reviewing Nordson's recently released fiscal first quarter 2026 results. Joining me is John, senior analyst at Smart Stock Watch. John, good to have you.
Great to be here. Nordson delivered a record first quarter with strong top-line growth, margin performance, and an upgraded full-year outlook. Lots to unpack.
Revenue and profitability overview. Let's start with the headline numbers. Nordson reported record Q1 sales of $669 million, up about 9% year over year, and adjusted EPS of $2.37. John, what stands out here?
The combination of solid organic growth and favorable currency translation drove the revenue gain. Organic sales were about plus 7%, and currency added roughly plus 4%. Profitability was strong. Adjusted EPS of $2.37 is a first quarter record, and EBITDA reached $203 million, roughly 30% of sales. That mix shows both demand strength and margin discipline.
Net income and GAAP EPS jumped materially too, a 44% increase in GAAP EPS. How much of that is recurring performance versus one-offs?
Q1 included a non-cash gain on a minority investment, which lifted GAAP net income. The company adjusts for that. Adjusted EPS was $2.37 versus GAAP $2.38, so the core operating performance is healthy independent of the accounting gain.
Segment performance and geographic strengths. The segments showed different dynamics. Industrial Precision had balanced growth, ATS surged, and medical was roughly flat. John, what should investors focus on here?
ATS is the standout. Sales 23%, driven by electronics dispense systems and recovering X-ray demand, with ATS organic growth 21%. That aligns with the company's comments about inflection in semiconductor and electronics end markets. Industrial Precision was solid across product lines, and medical and fluids engineered fluid solutions grew despite the prior divestiture offset. Geographically, Asia-Pacific was especially strong, sales up over 23% organic, which supports the momentum narrative.
Do the segment margins tell a similar story?
Yes, ATS EBITDA jumped 43% year over year, and margin expanded to 22%, while medical and industrial posted high mid-30s and mid-30s margins respectively. That margin expansion across segments is a key driver of the company-wide 30% EBITDA margin.
Cash flow, balance sheet, and risks. Turning to cash flow and balance sheet, operating cash was $140 million and free cash flow $122.9 million year to date with a conversion rate of 105%. John, how healthy is the cash profile?
Very healthy operationally. Free cash flow conversion above 100% is encouraging. Nordson is generating strong cash while continuing to invest. That said, long-term debt sits near $19 billion, higher than a year ago, so leverage is a watch item even though coverage metrics are supported by strong EBITDA and cash flow.
Any other balance sheet items investors should note?
Working capital movements and share repurchases were active. Treasury purchases and dividends continued. The company also noted increased backlog, up about 4%, which supports the near-term revenue outlook, but forward-looking risks remain: macro, FX, trade policies, and geopolitical events, as management cautioned.
EPS forecast, analyst consensus, and reaction. We have analyst consensus data. 4 analysts were forecasting EPS of $2.6. Nordson reported adjusted EPS of $2.37. John, how should viewers interpret this 1-cent beat?
Technically, it's a beat, albeit tiny. The more important takeaway is that both revenue and margins exceeded typical seasonal expectations, and management raised guidance. The adjusted EPS of $2.37 versus a $2.36 consensus reinforces that the quarter validated the recovery thesis, especially given the strong ATS performance and margin maintenance.
So this wasn't a surprise shock, but it confirms the company is executing?
Exactly. Small beats matter when combined with guidance raises and backlog growth. Investors will focus less on a single cent beat and more on trend confirmation and upgraded guidance for the full year.
guidance, leadership commentary, and strategic outlook. Nordson raised its full-year guidance, sales to $2.86 to $2.98 billion and adjusted EPS to 11.60. Q2 guide is also solid. John, what does management say about the outlook?
CEO Sundaram Nagarajan highlighted the proprietary technology portfolio, the Ascend strategy, and close-to-customer model as drivers, particularly in semiconductor markets. He said the strong first quarter and order momentum give growing confidence in the full year. Operationally, management pointed to broad-based order entry strength, especially in ATS, and a stronger backlog as reasons to lift the outlook.
From an investor standpoint, is the guidance raise significant?
Yes, raising both sales and adjusted EPS guidance so early signals durable demand improvements. The FY adjusted EPS range implies continued margin and volume execution through the year, which is constructive for investors focused on durable industrial growth plays tied to electronics and medical end markets.
Market reaction, sentiment, and company response. The press release included an invitation to a webcast and emphasized the stronger guidance. How do you assess market sentiment and the company's outreach to investors?
Sentiment from the release is clearly positive. Record quarter, margin resilience, and a guidance increase. Management promptly scheduled an investor webcast to provide more color, which helps transparency. While the release doesn't include share price moves, the combination of a revenue beat, margin strength, and higher guidance typically drives favorable investor reaction. Management also reiterated standard forward-looking risk factors, underscoring they remain cautious about macro and geopolitical uncertainty.
So investors get both upside and a reminder of risks.
Exactly. The company is celebrating operational momentum while responsibly noting the external risk environment. That balanced messaging is constructive for long-term credibility.
Key takeaways. John, wrap up for our viewers. How would you summarize Nordson's quarter and investment prospects?
Nordson delivered a strong, record Q1 with broad-based demand. ATS was a standout. Margins held up, cash flow remained solid, and management raised full-year guidance. For investors, the story is improving end-market inflection, execution on margins, and a credible path to higher full-year EPS. Watch leverage levels and macro risks, but fundamentals look constructive.
Thanks, John. That's helpful. To wrap up, thanks to everyone for tuning in.
Thank you. If you follow industrials tied to semiconductor and electronics recovery, Nordson is now a name to watch closely.